There's no such thing as being too old for a home loan, but there is such a thing as having a bad plan. Let me explain. So usually the bank would give you a 30-year mortgage if you're 40 years of age or less, because you've got about 30 years until you retire and you're most likely going to make extra payments, which means it will probably be gone by the time you reach 65. But what happens if you're like 55 or 60? Can you still get a mortgage? The answer is yes, but it depends on what your exit plan is and what other assets you've got. Because at that age, most people still want a 30-year mortgage to keep their repayments down, even though they're not going to be working by the time that 30 years is up. So a good exit plan might be that if you've already got investment properties, you might sell those by the time you hit 70 or 65 and use the sale proceeds to pay off this new mortgage that you're applying for. Other ones might be that you've bought this big family home when you're 45, and by the time you get to 65, the kids would have moved out and you're going to sell that house and buy something smaller known as a downsize. Or if you've got heaps of funds in like KiwiSaver or shares, then obviously you could use that money to pay off your mortgage before that 30-year term is up. So if you're 55 and want a 30-year mortgage, it is possible, but you do need to have a solid exit plan that makes sense, not to you, but also the bank.